Well, now time to check in on the economy, and the central bank's economic review for the final quarter of 2025 gives a snapshot of how things panned out last year and how things are looking for 2026. We go now to our Danielle Dean for the story.
The numbers have been crunched, and they're showing that the local economy grew in 2025 at a rate close to 3%, following a nearly 3.4% rise in 2024. As for what led to this outcome, Central Bank Governor John Rolle points to tourism and foreign investment.
Although stopover performance was constrained by limited hotel sector capacity and softer U.S. travel demands, earnings were still bolstered by appreciated product pricing, sustained expansion in vacation rental sales, and arrivals gains from non-U.S. visitors, notably from Canada.
While data on inflation was only available up to mid-2025, the news there promising as well.
On a 12-month basis after that point, average prices were estimated to have fallen marginally in the Bahamas, which would have signaled that the inflation rate over that period was a negative estimate, as opposed to an increase in average prices that was recorded in the comparable period the previous year. But even still in that period, the inflation rate was very moderate by recent experiences. And the recent inflation experience reflects savings in energy costs and reduced pressures in import prices up through the middle of the year.
In 2025, near and medium-term risks to financial stability and the Bahamian dollar exchange rate were contained. But Governor Rolle says they're keeping a close eye on downside risks.
They include the evolving and uncertain policy environment around trade, geopolitical tensions and conflicts in the Middle East and Eastern Europe, which could collectively disrupt tourism and the economy. And therefore, the central bank in this environment remains vigilant and ready to adjust policies as necessary to ensure that the outcomes are desirable.
Reporting for the Bahamas Tonight, I'm Danielle Dean.